Got Clay Hepler here. He's going to tell us a little bit about land flipping, multifamily burrs, wholesaling, being a real estate rock star, building your own business. And I'm really looking forward to it.
How's it going, everybody? And welcome back to the Real FI podcast. I'm your host, Patrick McGrath, with my co-host, James Rippion. How's it going today, James?
Going well, man. I have been looking forward to this one for, I don't know, 2-3 months now, mostly because we've been trying to get it scheduled over and over again. I had a conflict, Clay, our guest, had a conflict, and Patrick had a conflict, and that has built it up to this anticipation of this great episode. So I think we're gonna have a really good one. So we got Clay Hepler here. He's gonna tell us a little bit about land flipping, multifamily burrs, wholesaling, being a real estate rock star, building your own business. And I'm really looking forward to it. So you got anything else, Patrick, before we jump in?
I sure do. For everyone watching on YouTube, please make sure to like this video, subscribe, drop a comment below, since we finally have this one coming out. And let's get into it. Clay, why don't you go ahead and introduce yourself, give us a little bit of your background and how you got to where you are today.
Yeah, guys, and I can promise your listeners that this is either going to be your best podcast, your worst podcast, or somewhere in between. I can promise you that here today. I'm excited to be on here, and I believe that time and your listeners' attention is the most important resource that we have. So I really appreciate the opportunity to share my story, and I really hope that your listeners get some value out of today. So I always kind of start these off with background and say I was a failed diplomat. So quite a couple of years ago, I was an aspiring State Department diplomat. I was working for the State Department in Buenos Aires in Argentina. So what I was doing there is basically helping expat entrepreneurs establish like micro businesses. So, think about your guy that wants to, or your girl that wants to live in Buenos Aires and they want to start a beer garden. Well, we sort of help them with the translation, with some of the documentation, setting up your LLCs, really basic stuff like that. But I wasn't really on the business side of it. It seems very like business oriented. It wasn't really business oriented. But I really realized very quickly that my aspirations to get into the State Department were misled, because I realized that, at least for me, there was a timetable. Hey, you're in 1 year, 2 years, 3 years, right, guys? And you're 3 years in and you're at this level. There wasn't sort of like I put in X effort, right? As we know as entrepreneurs, and your listeners know that you put in X effort, the leverage that we have because of the people, because of media, because of capital or whatever, we can get to that next level very quickly. And that's why entrepreneurship is great. So I realized very short, in just a couple of months, that I didn't want to do this. And I was sitting there and said, what are my next steps? So at that point, I was a college athlete, and I had a career-ending injury before that. And I said, hey, I want to take some time off of college and figure out, where my life is going to go. And my family had a very small little boutique chocolate company that I was like, hey, I'm just going to take one semester off, right? Never went back, right? But the one semester really turned into me learning, cutting my teeth in the small business world. Basically, what we did was we built relationships with small specialty stores, hotel chains, celebrity chefs. We built a relationship with Jeffrey Zakarian from Chopped, and a lot of different sort of learning about marketing, sales, guerrilla marketing, everything, receiving, everything that an entrepreneur would know in a small little business, because I was doing a lot of it. I was doing mostly sales and marketing. But during that time, guys, I met a developer in a large metro area. This guy was basically a super successful developer, and he was like, hey, I'm an older gentleman now. I have all this money. I like food. Let me start some specialty shops. So we ended up selling chocolate to his specialty shop. And one day I actually called in, and he was one of these older guys that like to get his elbows greasy, And I ended up talking to him, built a relationship with him. And one of the biggest things that I learned actually from this gentleman was the most important thing, what you have to optimize for early in life and in life in general, is equity, because equity allows you to compound time. right? If you have equity in a piece of real estate, that equity can manifest in cash flow. If you had equity in a business, stocks, whatever, equity in Bitcoin, whatever it is, your money is working harder for you. So there are different ways to get equity. As we know, there's business, there's, you can have sales, you can join a big corporation and get equity in stock and real estate, all these different things. But one of the things, real estate was like, hey, this is super interesting. And eventually I said, hey, I don't really want to be in the family business. We took it from 2 to 42 states in 18 months. I don't want to be in it anymore because it's kind of a small business in a small town. And I want to go out and do my own thing. So I joined a real estate company because I was like, hey, I want to go learn this business. Joined a real estate company. That was about 2.5 years at this point ago. So what we did was, first year I was kind of there. We did look for multifamily properties, cut my teeth, kind of underwriting these deals, doing some couple of smaller self-storage deals. And then last year we built a wholesaling business. We did 75 deals on our first year in the wholesaling business. And what I was doing is, again, sales, marketing, all
So what?
getting out there. Sorry, go ahead. I'm just
Yeah,
rambling
no,
here. Go ahead.
I'm just curious, like what kind of real estate business is this? Because you said you joined the real estate business. Is it a syndication sort of thing, or
Yeah.
is it just some sort of business that's doing a whole bunch of different kind of real estate things, and you're kind of working on the marketing and sales side?
That's a great question. Yeah, so it was like a family business, mom and pop shop that I knew, and I kind of applied for the position, and they had a ton of units, hundreds and hundreds of units. They had their own property management company, and they wanted to build a revenue producing arm, which is why we got in the wholesaling business. Okay, so I was doing kind of everything, jack of all trades, right? Because it was a smaller family business, if you would say. They're doing well, just hundreds of units, but they were like, hey, we want to start producing revenue, and we wanted to start creating a deal flow for our own acquisitions, if you will. Okay. So that's how I got into the wholesaling business, if that makes sense.
Gotcha.
So that's really interesting. So with no real estate, no experience really, like, did they kind of coach you up, train you on what they were looking for? Like, how did you start analyzing these deals and knowing what to look for? Like, because I'm sure a ton of our listeners out there are kind of wondering the same thing. Like, hey, what was the learning process, the learning curve to kind of get you going there?
Bigger pockets. I joined like a guru course. I put my money where my mouth was and just started obsessively reading your Rich Dad Poor Dad, all the Bigger Pockets books, reading like crazy, bringing in those ideas. Got some teaching from the owner of the company and a couple of the other more seasoned guys there. So it was a little bit of everything, a lot of action, a lot of, again, cutting my teeth, and then obsessively reading every book that I mean, all these books behind me, there are tons, you probably can't see them, but a lot of them are real estate books, because I was, hey, multifamily, wholesaling, flipping houses, all of them. I read as much as I could so that I can learn the business quickly.
Yeah.
So,
I mean, that's the way you have to do it for everyone out there. Like, there's no magic, one course that's going to give you everything you need. You kind of need to consume as much information as possible and then pick out, what makes the most sense for you, and then just dive into that one thing. What do you think, James?
Well, I'm curious, Clay, like how are you being compensated while you're working in this mom and pop business? Are you being paid hourly, or, we were talking about this a little earlier, are you getting some sort of equity out of the work that you're doing, working in this business? Like how are you, I know you're just getting started out, so it could be either or, but like, how are you being compensated, at this time?
yeah, at that time I was being paid a salary, and I had a little bit of bump, in terms of like buying deals. But at that point, guys, I wasn't really thinking, like, obviously 24 at that point, or 23. Like I was like, I'd rather learn now, and I'd take a little bit of a smaller salary. I wasn't really making that much money, and so that I can learn this business. So I had a little bit of commissions, but again, it was like, 5 figures, mid five, like nothing that, you're gonna say, oh, this is great.
And we'll definitely get into like where you are today. But looking back, just for some of our listeners who might be thinking like, I have an opportunity to learn something practical, but I'm not going to be getting paid as much as I would want to be. Would you make that same decision today, looking back, seeing what you've learned from that experience, even though you didn't get paid as much?
Yeah. And here's what I would say too, is I would have gone for a better company. I would have gone to the single best company that I could possibly go to, and learn from them. Again, I'm not regretting anything because I love where I'm at today. But if I would have spent those 2 years at a really, really like ridiculous company, right? Like a huge syndicator or a huge home flipper or whatever I had an interest in, and I probably would have gotten paid the same salary, I would have probably chosen that. I don't regret my decision to work with this company because they still had hundreds and hundreds and hundreds of units. But optimal scenario, I would have probably chosen that. But I would say to the listeners, I would, if you're interested in getting into this business, you hear this all the time. It's almost cliche at this point, but join a company. Try to get in the business, and learn on someone else's dime before you start putting your own money up, and you get the reps, the action of underwriting the deals, negotiating with the sellers, and everything like that. They really allow you to become a professional real estate investor, a really good real estate investor. Just get in the gym, get under the barbell, do those reps. And then when you want to go out and do your own thing, you'll have the mindset, you have the wherewithal to be able to scale really quickly because you've already done it on someone else's dime.
With somebody else's cash. OPM, baby, other people's money. People talk about that all the time. And, getting a job at a company and using their money and their time to get that knowledge base. And like you said, that confidence, that mindset together, that's awesome. All right. So you're at this company, you're doing the revenue. So which is, providing the deal flow to them. So they're cherry picking all the awesome deals and then they're wholesaling the ones that they don't want. And you're learning that whole process. So take us from there.
Yeah. I mean, along the way, I'm like, these guys are we're making 7 figures in our first year doing this, good, right? I want to make, right. Like at this point, I want to start buying some deals. So about 2 years ago, I bought my first deal, which was a house hack, a 3-unit building house hack. Everyone's probably said this on this channel, right? FHA loan, 3.5% down. Everything that could have gone wrong went wrong, right? But I came out ahead and it appraised for much higher. And that was my first soiree into real estate. That was 2 years ago, basically today. And I'm up to about 40 units at this point. Just burring, using a lot of my own money. I have a partner on some of my last deals, but all multifamily properties except 2. One of them's a luxury Airbnb in the Rocky Mountains in Colorado, and the other one is a little crappy little house that I wish I would never would have bought in a sub-market outside of Pittsburgh.
Oh man, that's near me, man. That's about 4 hours north of me here in Maryland. So that's crazy. So tell us about that first deal because you were analyzing all these deals. Well, so you were maybe like 6 months into the job, it sounds like, and you wanted to buy your own property. So tell us about that first deal because you still made out with it. So yeah, break that one down to us. Why did you buy it? Like what was all the things that were like, oh man, I got to get this.
Right. So the way I looked at it was at that point in your real estate journey, when you're a real estate investor, there are many different ways to go about it, investing. You can invest in a syndication. You could try to syndicate and go really big. You could start flipping houses. Well, what I realized was the best way for me to gain the experience as a landlord, reduce my overall, because I was on a salary. My wife to be had a salary, and I had a salary, so I wasn't necessarily compensated like commission based. So if I were to be able to shrink my mortgage payment, which for those listeners who don't know, house hacking is basically you live in one unit or one part of a house and you use rent from other tenants in the house to pay your mortgage, pay all of it. You can cash flow a little bit or pay the majority of it. So I realized, guys, this is the best way for me financially at this point in my life to start my real estate investment journey, right? So that's why I chose to do house hacking. And it ended up being an absolute killer deal after a lot of issues. Like, for example, I bought this property. It's a 3-unit building, and we got it under contract in May of 2020. You guys are probably saying, wait, why did this guy just say, we're recording this in September, why did he say that he started investing in real estate 2 years ago? Well, that was the beginning of COVID, as you guys probably knew, right?
Yep.
So in Pennsylvania, the governor basically shut down everything, and our underwriters kept changing the requirements that we needed as an FHA loan because it's through the government. So we needed more and more escrow, PITI, principal, insurance, taxes, and interest that we needed to escrow to have in our bank account. So instead of 3 months, it went up to 6 months. So we had to double that. And they had underwriters that kept changing. So we ended up closing in like the middle of August, right? So here's where it gets crazy. We thought we were going to close in June, and there were tenants already anticipating moving out of the building, right? So these tenants were already anticipating moving out of the building, and we didn't close until August. Our lease at our current place of residence, which was a rental property very close, was up in October. So we didn't close into August, and our lease is up in October. And as a bright-eyed first real estate investor, you're like, oh, we'll be fine. We'll be able to get this done and move in by October 1st. Well, that didn't happen. So our contractor went in and took a $10,000 draw from our construction funds. So for your listeners who don't know, there's a FHA loan, which is a low down payment loan that has something called a 203K. And the 203K is your regular mortgage that you use to purchase the property. In addition to the mortgage, there is a construction component to it that you can allocate to fixing, improving the property, roof, flooring, whatever you want to do to get it compliant with HUD and also to make it livable. So it's a good product. There's a lot of red tape, but it's a good product for someone who wants to buy the value add first deal for your house hack. But back to the story. This contractor took $10,000 from us at the beginning. He said he needed it for a demo draw. Now, we never used this contractor, and this was our first time using an actual contractor in the context of our own real estate investing, right? So this guy was kind of random. He took it out, and he went through the house and did like a day of demo work, then called us up and said, hey, guys, I'm sorry, but you're about $60,000 short. Based on our initial construction, we have to cancel this contract. So at this point, I said, wait, you took $10,000 from us. You're canceling the contract. There's a loophole that they could cancel the contract. I have no idea what I'm doing. They were the general contractor. They had the electricians, the plumbers, the HVAC guys, the flooring, the kitchen, everything. So I'm panicking. It's the beginning of September. I said, in a month, what am I going to do? I got to go find someone in a month. I got to find someone to complete the entire building. This is a three unit building.
So what was the reason for wanting to terminate it though? Was it just, they started uncovering things that were a little beyond the scope of what they initially thought, or did they just try to get out of the contract for some arbitrary reason?
I think that they tried, they gave us a bid to win the actual property, the contract with the FHA loan. And then they went back and said, oh, we underbid so that they could get more money, which if they would have realized there's no more money in the mortgage. So they wanted us to pay them more money. I don't really know why they ended up canceling the contract, other than a lot of other people have had similar experiences with these guys since we had that experience. So I think they're shysters.
Yeah, they probably went in, they were like, hey, we're going to demo, we're going to get everything all jacked up, and then go, hey, we're going to need more money to complete this, and now there's nothing. Now you can't even like try to fix some of the stuff because they already ripped everything out, that's messed up. But it happens to a lot of first-time investors, and it had it to you. So what was the solution, Clay? What did you figure out? You seem like a pretty resourceful guy. What'd you do?
Well, I would say it's not just me. I have a tremendous partner in my wife to be. So she's just an absolute cheerleader and a killer. So she's awesome. So that was really helpful. But here's what had to happen. We had to move in with my parents, who live an hour and a half away. And we had to drive in every single day to get contractors and HVAC people. We had to floor all the building. We had to paint it because that was all of our budget. We were using space heaters at one point because this is in winter in Pennsylvania, in Pittsburgh, Pennsylvania, so it's freezing cold. It was brutal. It was really brutal. I mean, it was exhausting work every single weekend, just grinding. But we found a contractor, the same guy that we work with today with a lot of our deals. I was able to negotiate an additional amount that we would pay to him eventually, which was an additional about $40,000 on top of the current, our construction budget that we had allocated. And we completed the project. We moved in March, and we had all of our tenants in June, and it's been our best deal to date.
Well, it sounds like all that headache ended up being worth it then.
Guys, it was worth it. We really bought it at the right price, which saved us. And we're pretty tenacious, so we were able to make up the delta between what we lost with just our own labor. And I'll tell you, I never laid a piece of floor in my entire life before this, and I hated it. I hated every single second of it. I hated having to go to Home Depot and buying space heaters and putting them in each individual room because we lost our HVAC budget. We couldn't find the right HVAC person. So we had to heat the building with space heaters so we could, our paint could dry in the middle of winter, but we made it happen, guys. So that was the first deal.
Well, let's talk about the numbers a little bit. Like, what were your all-in costs from the purchase and renovation and everything, and then what kind of rents were you getting on the other units?
Yeah, so the numbers I bought it for 202, like 273 or something. We had a 5% seller concession. Our budget was about 120 for renovation. And then we had the additional 40,000 that we needed to finish up the deal. Our top floor rents for $1,250. Our bottom floor rents for $1,750. Our mortgage payment is $1,887. You can start to see the numbers are absurd. And we put a line of credit on it because it appraised for like $560. And we've used that line of credit to burr a lot of our properties.
Nice. So you got 190 grand in equity off of that.
Yeah.
Just from my quick numbers. So that's not too bad. And your cash flowing, while still living there. Are you currently at your triplex right now? Is that where you're doing this from?
The world headquarters, brother. World headquarters right here.
I love it. I love it. That's a great first deal. I mean, I think everybody, even if they're not handy, like on your first deal, man, you gotta grind. You gotta be in there painting and running to Home Depot and forgetting that one thing and making 4 trips in a day and just grinding out, man. Like your second home starts with Home Depot when you're doing your first one, like getting into arguments because you can't cut in and she can, but she's tired of doing that. And like me and my wife, we did the same thing, man. And it was brutal. But once we finished and like once it was done, you're like, all right, I have this sense of accomplishment. I know this works. And I also know I don't want to do X, Y, and Z again. Like never lay floor again. We're hiring that out. Like
amen. Amen on that.
It's that knowledge. All right. So you got your first one under your belt. All right. Let's continue the story. Where did you go from then? Because you're going from house hack to 40 units in 2 years, and we're already at March now. So that's like another 18 months. So like, let's figure out how the hell you did this.
Well, so yeah, you can, I guess you could even say it's less than 2 years to 40 units. Cause like we completed our first project. It's like a year to 40 units. I guess you get, or, year and a couple of months, right? So what happened was I caught the real estate bug. That's what happened, right? And so I became obsessed with finding ways to find off-market deals. I already had those reps guys through knowing the wholesale business. So what I started doing is walking around my neighborhood, when I talk to people on the phone, hey, I'm buying in this neighborhood. And when we closed in March, or when we got there in March, that May, we closed on another 3-unit right here, right next to us on this, like right on almost the same street, because I called this woman about a different property associated for a rent sign. I called her and she said, "Hey, would never sell you this building." It was like a 15-unit building. I don't even know why I was calling her, but I did. And she said, "But I know my son is interested in maybe selling." So what really happened is I said, "Hey, I'd love to learn more about your business. Tell me a little bit more about your business." So we went to this local breakfast joint in my neighborhood and we started talking, and we talked more and more about her son. And then she gave her son my number. And that Sunday, we met on like a Wednesday. That Sunday, Kara and I went over and saw this 3-unit, and we were like, "Yeah, we'll give you this price. Let's go." Because I knew what mine appraised for, and I knew that we would be able to burr it. So yeah, we bought that 3-unit, which was in May, and renovated that a little bit, increased rents, increased amenities, and then bought a single family that fall. And then that last January, we bought a 6-unit, and then we bought a multi-million-dollar Airbnb in this May. And then we bought all the other units, the 20-something units within the past like 2 months, 3 months.
Man, that's awesome. Like we got a lot to unpack there. I mean, I love that, you were basically your entire story up to this point is just doing everything that everybody has beat, hopefully everyone over the head with, which is when you see a for rent sign, call it and ask. Like, start just calling people. And then when you get in touch with them, don't immediately say you want to buy their building. Ask, hey, look, I see that you own a lot of properties. Like, I want to learn about your business. I want to be where you are one day. Here's what I have. Me and my fiance, we have a little triplex. We're looking to buy another property. If you happen to have one that you've been thinking about selling, like, at least let us know about it. And now they're not just selling to the guy on the phone trying to buy their property at a steal. Now they are helping out this young couple who's hustling, that's trying to build a portfolio like them. Don't you think, James?
I agree, man. I mean, that's my biggest problem whenever I get on the phone with some off-market sellers, just the word vomit and being like, "Sell me your property, please," and trying. And that's the thing I really need to work on. And I think people can take a lesson from that and Clay's experience and Patrick's experience. And the number one key being build rapport and build a relationship and build that connection so that you can get to the deal afterwards. But real estate, we harp on this over and over. It's a relationship business fundamentally. So I think that's a huge lesson. And Clay, maybe you can dig into that a little bit about like what are some of the things that you do for your off-market deals to build that relationship and build that rapport so you can finally get to the deal table.
Yeah. So I'd like to preface this by saying the word vomit comes from not looking at enough deals.
Yeah.
Instead of coming from, and I'm not calling you out here, I'm telling this to listeners, it doesn't come from not being the type of person that's actually a good guy or a good girl. It comes from a lack of volume.
Well, I think
you don't have
personally on my end, I think it comes from not having enough face-to-face sales experience.
Okay.
Personally, and because it's a nerve-wracking thing to do, to like cold call someone up and point blank try to figure out what their sales motivation is.
Yeah. So if we're talking just straight sales here, like we can deep dive into the sort of tactics, tools, strategies that your listeners can really benefit from. Because I've been in multiple different sales roles with multiple different sales cycles, larger apartment buildings, smaller apartment buildings, self-storage, flipping, candy, right? And really the intention is the most important thing. I'm just going to say that, and people are going to be like, what is this guy talking about? I wish that, he could tell me the 1, 2, 3 step to close the seller, right? and get this deal no, it's actually all about intention. So if you're going into a conversation, someone can tell, even if you're, a pathological liar, someone's going to tell if they're, especially people in this business who've been in this business for a long time and and have dealt with tenants and human relations their entire life, they can tell when you're being authentic and you have good intention, and they can tell when you don't. So the way that I always approach these conversations is I get on the phone with someone and I immediately address the elephant in the room. What's the elephant? Hey, Dalton. Hey, Jackie. I know that you've gotten this call a million times. That's what you got to address right away, because it's true. And they're going to think the same thing. Hey, James is calling me and he's trying to steal this property for 20 cents on the dollar. And he's just going to beat me over the head. And he's going to say, oh, your roof's wrong and all these things are wrong. And he's going to ask me a million questions and he's going to give me an offensive offer. So you want to, right at the beginning, address and set the right expectations. I know that you've gotten this call a million times. I'm a local investor and I'm really interested in learning how you purchased X building. I see you also have all these other buildings. Here's my portfolio. I'm looking to get to the next level. And I'd love to learn how you bought these specific buildings. I like to buy anything. I like to buy duplexes, 15 units, but I'm really interested in learning this. Like if you have a specific address that you're going after, I'm really interested in learning about this. I find that the best way to learn is by learning from people through relationships versus learning from books in theory. And all these people feel that same exact way. If you talk to them, you understand that most of the sellers that have the 150 units or 250 units or whatever, they all did it through some education, but mostly through the school of hard knocks. So what you're doing progressively through this conversation is you're being really authentic. You're telling them the exact intention, right? Because you are saying, hey, I actually want to learn about your story. I'm curious. And then you're also saying that it's valuable. Your experience is actually valuable to me as a person. And so what happens is I was at a guy's house last night, 85 units he owns. He owns all these larger buildings. And I was just, we were just sitting there and BSing. And the conversation was just like what I just said to you, James. And he ended up telling me about this 11 unit that he bought. And I was like, that's cool. Hey, I'd love to just, get together, grab a beer or, grab breakfast or take you out to lunch on me. I'd love to hear your story. And most of the people are just going to be like, okay, cool. Let's grab lunch. Right. And then there you're not pitching them. You're saying, hey, I'll give you $50,000 for your, 15 unit building. It's really just about learning about their story. And then when you come at them authentically, maybe that person doesn't sell it to you, today, but I bought 11 units from one guy this year because I just had that posture. So I hope that was helpful. If you guys have any follow-up questions related to that.
No, I mean, I couldn't agree more. And it, like you said, it's all about building that relationship. It's all about that intention. And, most people's intention is to try to steal the property. And your intention is, look, if we can come to a mutually beneficial agreement that makes sense for both of us, great. If not, totally understand. But I still, like you said, see the value in you and your journey and how you got there. And maybe just this conversation can help me out enough. And, it might not be right today. It might not be right this month, this year, but down the road, when the guy or gal does want to sell the property, the first person they're going to call is you, because you had an impact on them. You left a mark over everybody else that sent them a postcard or an email or a text message, or just had a phone call and say, hey, I'll give you, like you said, 20 cents on the dollar, 50 cents on the dollar, whatever. And that is the biggest thing is the relationship, and the relationships in turn will drive the result that you're looking for, but you have to go at them genuinely, and with the passion of truly wanting to know, truly being inspired by these people, and not just truly being inspired by trying to make the best deal possible. Like these people that have hundreds of units, they didn't build a portfolio by buying mega amazing deals. 9 times out of 10, It's singles, doubles, and triples, all kind of packaged together that end up building, this awesome, amazing portfolio. So people have to remember that too. I mean, I absolutely love it. Now, you talked about burring your way through this. Now, I know for me, the seasoning period is like 6 months on each one of those deals before you can start the refinancing process. So, you know, where were you able to get the rest of this money from to buy these other like 20 some units, this, multi-million-dollar Airbnb? Like, let's talk about that a little bit, and where your portfolio is kind of in and where it's at right now.
Yeah. So first of all, you can get banks that don't have seasoning periods. So that's the key. I start the refinance property process when I don't even have people in my buildings. So when we finish the refinance property or process, a month after or a month and a half after we start it, we have people in the building. So I'm really, really concerned about the velocity of my capital. So I'm always thinking about, hey, how do I increase the velocity of my capital? Because I didn't grow up with $1 million in my pocket, right? So for someone like me who didn't come from a lot, I need to make sure that every one of my dollars is working hard for me, which is why I like the burr process. So I've been able to effectively burr and pull out a lot of cash for a lot of these deals, and I've been able to continue to scale that in that way. Now, on the last couple of deals, I've actually taken on a partner that's aligned with who I am and aligned with my interests on a couple of my last few units, because I realized that I have a certain skill set and my partner can bring a monetary skill set, some construction experience to the table, because I want to get to a certain unit count, and I'd rather have a smaller bite of a watermelon than the full bite of a grape, right? That's some cliche, analogy, but it's really, really true, guys. So I realized that if I could do a 50-50 deal with a partner, a joint venture on a couple of my deals, that it could propel me to continue to grow and grow and grow. So on my last couple of deals, that's the way I've also increased the velocity of my capital, because I'm the boots on the ground guy. I'm finding a lot of these deals. I'm negotiating. I'm doing the financials. I'm doing that, a lot of the asset management. We have a property management company with whom we work, and he's bringing some construction capacity as well as some of the capital as well. So that's kind of how I've been able to, in 3 months, buy 26 units or 30 units or whatever it is. And yeah.
So I think that's super important. People, I think, underappreciate the value of partnerships, especially when you find that right partner that complements you in either the time element, the skills element, or the financial element. Because I always think of it as a triangle. And the great thing about what you're doing is that you've got that partner who's got money and they're financially contributing to the joint venture here. People with money know people with more money. And when you start doing good projects with them, that's when, especially in this real estate business, things start to compound and build and snowball pretty quickly, because he's going to be talking about the great deals that he's doing with you, in your efforts and your skills of finding the deals, working the deals, and putting everything together. Having him step into his role, he's going to start sharing those experiences with other people as well.
That is such a good point, James. People with money know people with money, and relationships is we're all talking about here today. It's critical for success, and making sure that, for a partnership, making sure that you're really transparent with what is each partner doing and constantly checking up. We check up on a weekly basis, almost on a daily basis. How are things going? How are you feeling about everything? How's the burr we just got a burr back today, and we're pulling out some mega cash. Before these interest rates go absolutely exponential.
What's mega cash, man? Tell us. Give us some numbers. What's mega cash?
Well, I mean, six figures on a really small deal. In debt. So that's tax free. And so when you're a 200 and something $1,000 duplex and you're pulling out 6 figures, you're like, whoa. Right. But relative to the appraisal price, is really
that's
good.
big money for a deal. That
Yeah.
sounds
That is. Are we doing 80% loan to values? Is that how you're doing these?
Yeah, this was like probably 70, 78, 79. Now I'm seeing that, banks are really focusing on debt service coverage ratios, even over the loan to values, right? Like that's really what our banks that I've been working with are focusing on, guys. And for the listeners that don't know, debt service coverage ratio is the percentage that your debt is covered by the gross rents of the property. So if banks usually will underwrite for a certain percentage, like 110% or 120% of your debt service needs to be covered by your rents, or they won't get up to that loan to value. So that's something that's really been important now that we're looking at for our BRRRRs, is that, hey, are we covering our debt? Because as interest rates continue to climb, our LTVs are going to go down. But that the real focal point is not the LTV, because it doesn't really matter. What matters is this debt being covered by our rents?
Exactly. And typically you want, like you said, you want that 1.2 to 1.25 for a bank to be nice, warm, and fuzzy about the deal, especially if it's a new deal. They might go down a little bit if it's a refinance, but if you're bringing them a new deal, you need to be at that 1.2, 1.25 range for the bank to even want to loan the money at all. So especially now, and if it's a new relationship that you're building with a bank, I'm sure you have these relationships, so they might be willing to lend more or lower that ratio because you have a whole portfolio now that they know can cover those payments. And it is relying on the property, but it's also relying on you and your business as well. So those are all great points. So let's get into your goals a little bit. Like, you have exploded over the last 2 years. 40 some units, but break that down for us on the ultimate goal that you have over the next 2-3 years, what that's going to look for you on a monthly basis. What kind of money is going to be
We're
flowing
going
into that
deals, but
bank
we're going
account?
down, boys. We're going
Yeah,
down. We're
yeah.
getting down into the numbers. Let's do it. Let's do it. So first and foremost, I want to be a present father for my kids. I don't have kids yet, but I'm planning on having kids. And I really, really want to be set up to be a present father. That's what I'm optimizing for in fun in my life. I absolutely am in love with my wife to be, and I want to spend time with her. Like, I don't want my business to be so it's so much of my time that I can't enjoy my life with her, because we have such good time together. So family to me is sort of the thing that I'm optimizing for. But like, if we're talking numbers, I want to be at the 50,000 a month within the next like 3 years, just from my passive income. And then I want to have a multiple 7-figure land flipping business. So, the land flipping, we kind of briefly touched on. I'm starting in that business. I think that there's a path to multiple 7 figures pretty quickly, if I continue to do what I need to do. And then from the cash flow point, 3 years, I want to have $50,000 a month, coming in from every single month, like clockwork, from my commercial assets, my multifamily assets, so that, I can, and also, but doing it in a way that, I'm not spending more than 50 hours a week in doing that.
Do you
I
have
love
an
to work.
idea?
Oh, yeah, go ahead.
I was going to say, do you have an idea on either the net asset amount that you're going to need, or the number of units you're going to need to achieve that 50,000? Because, you kind of break it down by your per unit cost, or, your building cost, kind of round numbers, and your per cash flow, per asset, per door. So do you have an idea of what it's going to take for you to get to that 50,000 based on like your current portfolio, and if you multiplied it out?
Not necessarily. And the reason why I don't is because I'm trying to take the opportunities as they come. And when I say that, I mean, if there's a really awesome opportunity to do a specific asset class, like I like multifamily, because I know it. But if there's a really interesting opportunity to a certain asset class that I'm, learning about now that can get me to that goal, then I'm gonna do that. So I don't really want to box myself in terms of like, I need to follow this strict rule to get to this net asset amount, because my cash on cash return qualifications could change completely differently if I have a multiple 7-figure, land flipping business. What if I just put that into my real estate, then I can get a much lower return and still achieve my, my monthly cash flow amount.
That's awesome, Clay. When we normally ask these questions, we'll say like, "What's your goal?" and then like, "What's your why?" But I love that you just totally flip that, man. You're like, "My why is my goal, and I'm going to fill everything in to get there." And here's what I need to get there. It's the $50,000 a month, income, and then the 7-figure land flipping business. And I think I appreciate that priority, because I think you're going to really build your business around that. You're not going to get sucked into it to such an extent that everything else is sacrifice. So if you kind of had to identify obstacles, maybe just generally, that exist in between you and reaching your goal, maybe your financial goal, what would you pinpoint as being those big obstacles?
Well, I see that the biggest obstacle is me becoming a better leader. That's sort of that feels to me like the biggest obstacle. And when I say that, I really mean that, if you're talking about these numbers in this short amount of time, what has to happen is you have to have people that you defer tasks to. And I need to become a better leader of people and empower them to get into positions of authority within the context of my businesses. And that's the biggest obstacle, guys. I mean, in order to get to that amount and not be super unhealthy, well, I have to create an ecosystem, a world in which other people want to be a part of it, that feel empowered, that feel like they can create their own destiny in that context. And so painting a big enough vision and, encouraging people to get to that level is going to be the biggest obstacle for me, because I've never done it, right? I've never done at that level. And I feel like people is going to be the biggest issue for me.
Yeah, I could not agree more. And I love that answer so much, because you are exactly right. If you're talking about, building a 7-figure business, plus you got to hire people, you've got to be able to have people that you can trust, that you can rely on, that have skin in the game to help you get there. And like you said, so you're not burning out, taking the weight of the entire business on your shoulders. You've got to be able to spread the stress out, the responsibility out. And I love how you said empower others to be a part of something that you're building. So that's super amazing, man. I absolutely love it. And I think all of the listeners out there have to be inspired by this story. So I think this is a perfect transition to get into what we like to call the Big Four.
Nice.
James, kick it off.
Taking it away. All right, Clay. So this one's super easy, man. I want you to enlighten our listeners. I want you to give something that you do that's like a financial independence hack, a cheat code, something that you either do in business or personal life that really elevated you financially.
Oh, I don't want any dead air here, but this is a really great question. I think that a financial hack that changed my
it could be something that you do on a personal financial basis, or something that just helps you attract wealth one way or
Okay.
another. It doesn't have to be anything too extravagant or anything, but just something that maybe people aren't thinking of. And honestly, a lot of the answers we get, it's super obvious shit. Like it's
yeah.
And it's
Sure.
the things that people overlook necessarily. And
Yeah.
there's sometimes are the best answers. But yeah, what do you got, man? What's something that you do that just kind of feels like a financial independence hack?
Every morning I pat my head and rub my stomach, Everyone can try it. I'm just kidding. No, no. But
I thought
it
that
took
was
me a
some
long.
Miracle Morning shit or
Yeah,
something.
right,
I'm
right,
like, I
right,
can
right.
see it. Maybe it works. I don't know. You
No.
start the day.
And then did my juju prayer. No, in all seriousness, it took me a really long time to learn how to do that. But the thing is, understanding that you're not going to get to your goals by shrinking your way to wealth. I just want that to not be cliche. It's really cliche, but it's so true. As soon as you change from restricting, from scrimping, from saving, from delaying, from deferring to focusing on investing in yourself, investing in your business, investing in your life experience, giving yourself time off, and thinking abundantly is the time that you will start to expand. I thought I was doing that last year. I wasn't. I was living in scarcity. I didn't want to take on a partner because I went 100%. I took on a partner this year. My business has changed completely. My mindset has changed completely. This year, I'm thinking about 7-figure businesses, guys. I was not thinking about that months ago because my mindset has been changing every single month because I've been working on it, because I've been focusing on abundance, not scarcity. I've been focusing on expanding, not contracting, not scrimping, not saving, not delaying or deferring.
Well, I think it's a great first lesson for everybody to learn financial, good skills and like not blow your money. But at the same time, you can only save so much. And I always have this expression: when you're in a cold room, you can only get so naked.
Oh,
After that, you got to start turning up the heat. So I think that's a great lesson. It's a hard one for some people to live by. Like some people spend too much, and some people just save too much, frankly. But I think that's a great answer.
that's a
I
great
absolutely love
analogy,
it.
man. That's a great analogy. He won the analogy of the podcast right there, guys.
Analogy of the podcast goes to James Rippion. We still don't know what's in that cup. He keeps claiming it's coffee.
I'll
But...
pat my head and rub my belly.
There you go, dude. I love it.
All right, my man. Clay, we call this one resources. And by the bookshelf, I think you're going to have some good ones for us. So, are there any books, podcasts, or people that our listeners should definitely check out because it's shaped your mindset, your financial independence journey, and where you are today?
Yeah, I would say Charlie Munger and Naval Ravikant. So Charlie Munger is the partner of Warren Buffett. Most people don't really know about him, but he's incredibly intelligent, and I think that his teachings about models and how you think about the world is just tomes of wisdom that most people today don't think about, and I think it will elevate your mindset. And Naval Ravikant is a really famous Silicon Valley VC guy. He has invested in a ton of companies, has a company called Angel List. And he has this book called The Almanac of Naval Ravikant by this guy by the name of Eric Jorgensen. I'm sure you guys know about this, but
Great
he just
book,
talks
man.
about, yeah, he just talks about like leverage, thinking about leverage differently, how to build wealth. And his principles are just timeless. And the way that he delivers them are just so matter of fact that it's like a punch in the face of really good information. And so I think that if your listeners study Charlie Munger and think about Naval Ravikant, that their world would completely change.
Yeah, the foreword on the Almanac of Naval Ravikant is written by Tim Ferriss too. So that kind of puts into a nice circle kind of the content you're getting from that. If you've ever read anything by Tim Ferriss,
And if you don't know who Naval is and he hasn't come across your For You page or your YouTube page, you're not looking at the right videos on YouTube because that guy is literally everywhere. So love it for the people. Do you got any books, man? I see a whole bookshelf back there. Give us like your top 2 that our listeners, should definitely check out.
For what particularly?
real estate,
Whatever,
man. Give us a real estate one.
Real estate books. Oh. I think a good real estate book is the 80-20 rule, 80-20 principle by Richard Koch. There's another one by Perry Marshall, and it's not really real estate related per se, but it talks about the 80-20 rule, which was invented by Vilfredo Pareto in like the 18th century in Italy. And basically this guy was analyzing the wealthiest people in the country, or the people who owned the most amount of land in Italy during that time period was 20% of the people. And these sort of power laws, it's another Mungerism, thinking in terms of these mental models of, hey, 20% of the things that you do in your real estate business are going to yield 80% of your results. So like be ruthless about what your 20% is. And then the second book, I would say the second book is probably How to Win Friends and Influence People. Just because like everyone should read that book. And if you don't, like, turn off this podcast and please go read it, because it's really about relationships and how to build meaningful relationships and how to be an authentic person. And I just think it's like a amazing book.
Well, after you turned off this podcast, come back, leave us a 5-star review after you've read
Right.
How to Win Friends and Influence People, because it's a great book. It'll literally change your life and how you communicate with people. So, Clay, for this next one, I want you to paint a picture of Clay's world 5 years from now. It's the future you. Describe to us your business, whether it's your buy and hold investments with your partners and your land flipping, or your personal life, or both. Like, where's Clay 5 years from now?
Yeah. How much detail? I mean, I read this every morning. I'll give you the high level.
Yeah, give us the high level.
Clay Hepler is at his core, he's a go-giver. He's the best husband he could possibly be to his wife. He's a present father that loves his children deeply. He really focuses on creating value, adding value, and knows that his measurement of who he is as a person and who he is as a man is actually the amount of value that he gives versus the amount of value that he takes from the world. He has a massive land flipping business, multiple 7 figures, a really awesome commercial real estate empire, multifamily empire that has a lot of people working in that context and loving life up, and they all live up in the Rocky Mountains because I love the Rockies. And I go on a vacation, a retreat with my team every 12 weeks with my wife and my family, and we really love life and we really enjoy life and we have a really awesome time going after our goals, and we're financially abundant.
I love it, man.
Wow, what a fantastic answer. And again, that sounds like what you did was do exactly what Brandon Turner has talked about multiple times, was to write your news article of the future. And that's exactly what you did, and you read it every morning. So for our listeners out there, you're literally just doing everything that people have told us to do to be successful. And that is how you become successful, where you're going to beat it into everyone's heads over and over and over again. But my man, all right, we come to that time where our listeners want to know, how do they get in touch with you? Where's the best place for them to get in touch with you?
Guys, reach out to me on Instagram or Twitter. I'm pretty active on both of them. I try to post pithy stuff on Twitter and Instagram. I'm relatively active on a weekly basis about certain things that I'm doing, tips about burrs, tips about land, tips about being in a relationship. And
what's your Instagram handle and your Twitter handle?
Yeah. My Instagram handle and my Twitter handle are both Clay Hepler, and ClayHepler. And shoot me a follow, and I'll definitely follow you back, and would love to add value to your listeners' world.
I love it. I love it. That'll be down in the show notes if you are watching on YouTube, or if you're on the podcast. Please make sure to leave us a review. If you like this podcast, if you hated this podcast, we really don't give a shit. We just want you to leave us a review. Apple, Spotify, Google, YouTube, whatever. Just do something. And we'll catch you guys.
Man, that's a call to action if I've ever heard one, man. I love it.
Go do something. We're out here giving you guys a ton of value. Leave us a review. We'll talk to you guys next time.
See you.
Peace.
Peace.
Thank you for listening to the Real FI podcast, where you learn from the investors that have lived the hard lessons for you. To connect with us during your pursuit of financial independence, be sure to join our community by following us on Instagram or emailing us at info@therealfi.com. If this content made you financially, mentally, physically, or spiritually richer, please make sure to leave us a positive review on your preferred content platform. Cheers to kicking the 9 to 5.